On Wednesday, the 16th of September 1992, the UK economy was in deep recession. Unemployment was 10%, interest rates were 10%, and the pound was struggling to maintain its value against the Deutschmark. As soon as markets opened on that Wednesday, financial investors piled in to sell pounds to a beleaguered government. Sterling fell, reaching the floor of the exchange rate mechanism. But the Conservative government were deeply committed to the ERM.
We are absolutely committed to the ERM. That is our policy. It is at the centre of our policy. We are going to maintain sterling's parity, and we will do whatever is necessary.
John Major and Norman Lamont ordered the Bank of England to sell $24 billion worth of foreign currency in a bid to prop up sterling. But it was to no avail. A relatively unknown hedge fund manager, George Soros, had spent months shorting the pound, ready for what he anticipated would be the pound's inevitable demise. In a day of frantic trading, the government couldn't keep up with the volume of selling. The Bank of England had to accept whatever price sellers demanded. In desperation at lunchtime, the Chancellor raised interest rates to 12%, which in theory should strengthen the pound, but with the housing market already crashing, the economy in deep recession, markets almost laughed it off as a desperate measure doomed to failure. Norman Lamont told John Major the game was up, but John Major didn't want to hear this. He didn't want to admit defeat for his central economic policy. It would look so bad politically. Not knowing what else to do, they promised that interest rates would rise to 15%. It was really an act of desperation, and the markets knew it. Nothing could stop this selling of sterling, and eventually by the end of the day, the government succumbed to the inevitable. They left the ERM, devalued the pound, and interest rates could fall. The day really did change the direction of the UK economy. The ERM was the precursor to a single European currency, but the UK's disastrous experience left a profound scepticism about the euro and perhaps Europe in general. Without the ERM debacle, Tony Blair probably would have taken the UK into the euro in 1999. But the ERM crisis and the sight of flailing ministers caused a huge shock to the reputation for the Conservative management of the economy. Despite having just won an election, Conservative support plummeted from 42% to 29% overnight, and it never recovered. The rest of the parliament will be dominated by scandal, sleaze, a diminishing majority, and rebellions by an increasingly Eurosceptic backbenchers. There was also a general sense in the country that 18 years of Conservative government was just a bit too much. But the biggest irony was that leaving the ERM was probably the best thing that could ever have happened to the UK economy. Many had dubbed the ERM the eternal recession mechanism, and in the case of the UK, there was a good deal of truth to that. After leaving, the government could cut interest rates, reducing pressure on beleaguered homeowners, boosting investment and boosting economic growth. And the interesting thing is that the devaluation didn't cause any of the inflation that had been generally feared at the time. In fact, from 1992 to 2007, the UK went on the longest period of economic expansion on record. The boom and bust period seemed to be over. In 1997, though, New Labour won a landslide and inherited a relatively good economy. National debt was just 45% of GDP, inflation low, strong economic growth. The pound had even recovered some of the lost ground. So it begs the question, if leaving was the best thing that ever happened, why did the UK ever join? In the early 1980s, the UK had rampant inflation, a hangover from surging oil prices, rising wages, and high growth in the money supply. Thatcher's medicine was high interest rates and monetarism. Inflation fell, but at the cost of a deep recession and a surge in unemployment. In 1983, Nigel Lawson was made Chancellor, and by then the economy was starting to pick up. In fact, over the next 6 years, the UK economy started to boom. Lower tax rates, lower interest rates, and deregulation all helped create rising incomes and a surge in house prices, especially in the south. In fact, the UK economy grew so quickly, inflation made its inevitable return. The supposed supply-side miracle was more hubris than reality. Yet to Lawson, There was a simple solution to inflation's return. Join the exchange rate mechanism and fix your currency to the German Deutschmark. In the post-war period, the German economy was the envy of Europe. Low inflation, high growth. And the idea was that by fixing the value of a currency to the Deutschmark, there would be the discipline to keep inflation low, benefit from the strength of the German economy, help reduce inflation expectations, and suddenly everything would be great. But Mrs. Thatcher was sceptical, and she refused to join. In fact, there was good reason to be sceptical. In 1967, there were 11 Deutschmarks to £1. By 1989, this had fallen to just 3 Deutschmarks. The pound was in long-term decline, and it was really wishful thinking that this could suddenly be turned around just by joining something like the ERM. In a rather uneasy compromise, Nigel Lawson tried an unofficial shadowing of a Deutschmark to keep the pound at his desired level. But this required really high interest rates of 15%. But given the surge in mortgage lending in the 1980s, this came as a huge shock to the economy and homeowners in particular. Mortgage rates soared, people couldn't keep up with payments, repossession rates soared in the early 1990s to unprecedented level. And after criticism from within his own government, Lawson resigned and was replaced by John Major, who ironically was actually able to convince Mrs. Thatcher to join the ERM at a rate of 2.95. However, to some shrewd investors, this seemed like a really bad idea. High interest rates were killing the UK economy, GDP was falling, unemployment rising, and house prices crashing. In fact, house prices fell 20%, and it took 6 to 7 years before they started to rise again. George Soros had steadily built up considerable wealth as a private investor, and he correctly reckoned that this exchange rate was not sustainable. UK inflation was 3 times higher than Germany, UK exports were uncompetitive, and the high interest rates necessary to keep the pound strong were depressing the economy. He used his hedge fund Quantum Fund to borrow pounds from banks and buy foreign currency. He also used options and future contracts to short the pound and leverage his position. Basically, he was making a huge bet the UK would have to devalue the pound or leave the ERM altogether. He eventually went on to make £1 billion on profit by shorting the pound, using funds he never even owned. No wonder he became something of a bogeyman to some people. But by September 1992, the UK economy had gone deep into recession. Unemployment was back up to 3 million and house prices still falling. It was really an untenable situation. Yet to the government there was a point of pride. They were committed to the ERM. It was a cornerstone of their economic policy. To U-turn would make them look weak or politically incompetent. But also there were other problems too. The once mighty German economy was also having its own difficulties. Reunification of East and West Germany had been incredibly costly, and German interest rates had to rise to deal with Germany's own inflation, and this caused the Deutschmark to appreciate, putting even more pressure on currencies like sterling and the lira. On the 15th of September, the president of the Bundesbank mentioned to a journalist that more comprehensive realignment of currencies was inevitable. Hardly the most striking thing ever said, but it was enough to trigger markets to go into overdrive, and as soon as they reopened the next morning, the selling of a pound overwhelmed the government. John Trott, a former official of the Bank of England, said that Black Wednesday was stunningly expensive for the government. During the day he bought more sterling than at any time in history. But every purchase failed to stem the decline, and every purchase just lost money for the government. When the dust had settled, the UK Treasury estimated Black Wednesday had cost an estimated $3.5 billion, though at the time the losses were put in the tens of billions. Now there had been a hope that the Bank of England would be helped by the German Bundesbank, who could intervene by selling German Deutschmarks and buying pounds. However, Trott remembers, the cavalry with the Bundesbank, we kept on looking over the hill, but there was no dust and there were no hats and no sabres. And then later when we tried to talk, they suddenly didn't speak English, which was extraordinary. So much for European unity, and the ERM certainly gave a boost to the more Eurosceptic wing of the Conservative Party, which until 1992 had been something of a fringe movement. How times change. The weakness of John Major and his association with the failure of the ERM only strengthened those Eurosceptics who would go on to vote against the government in the Maastricht Rebellion of 1993. The ERM also led indirectly to a new inflation policy. Rather than targeting indirectly the money supply like the early 80s or the exchange rate like the early 90s, now the UK would target inflation directly. In 1997, New Labour would actually give the Bank of England independence in setting monetary policy and interest rates, a tacit admission that politicians weren't very good at managing the economy. And there's never been any interest in trying to manage the exchange rate again. George Soros would admit that no one other than himself had benefited from his financial speculation. But if it hadn't been him, it would have probably been somebody else. George Soros actually advocated a single currency, but whilst Tony Blair was definitely keen to join, Gordon Brown, who was Shadow Chancellor during Black Wednesday, became vehemently opposed to the euro and persuaded Blair not to join. By the way, if the UK had joined the euro in 1999, Brexit would have been completely different. It's very easy to join the euro, but really hard to leave. The early 1990s were really quite a traumatic period for the UK economy and the housing market in particular. Membership of the ERM distorted the economy. Interest rates were higher than necessary, and it caused a recession deeper than otherwise it should have been. The UK economy did much worse than comparable countries. It was yet another self-inflicted wound for the UK economy. But interestingly, the rest of the 1990s were relatively good, at least by recent standards. The ERM debacle was an interesting footnote to the 1980s. But what about the rest of the 1980s? Did Thatcher save or destroy the UK economy? This video goes into more detail. Do check it out. And if you have more memories of that Black Wednesday experience in 1992, do let me know in the comments. I was 16, just starting to study A-level economics, although the only thing I really remember is my father saying how high mortgage payments were in that era. Anyway, thanks for watching. Do subscribe. See you soon.